It's been almost 2 years since I started investing with the Magic Formula strategy. And let me tell you, it has been quite a roller coaster ride. You're probably curious how a portfolio of Magic Formula stocks has fared during all the ups and downs of the coronavirus crash in 2020 and the recovery ever since. This video is my 2020 recap, so if you want to know how it all went, then keep on watching. To refresh your memory, when I first started buying Magic Formula stocks in my SEP IRA, it was going just fine, about a 6% return in 2019, nothing to write home about, and also way below the performance of the S&P 500 benchmark index, by the way, which returned 28% in 2019. So even though it underperformed, I was still happy sticking with the Magic Formula, knowing that it's a strategy that outperforms over the long term. I wasn't going to give up on the strategy just because of 1 year of mediocre results. But then 2020 happened. For anyone who owned stocks during the coronavirus crash, it was around March and April of 2020, things got very ugly. My Magic Formula portfolio was down as much as 30% at one point, which I actually talked about in this video right here. That was not fun. And what made it even more difficult was that the Magic Formula requires you to sell your stocks after 1 year of owning them. And then it also requires you to replace them with new stocks. So you're always rotating stocks in and out. So back in March of 2020, I had 7 stocks that had been in my portfolio for 1 year, and it was time to sell. Problem is, selling right then and there would have meant locking in huge losses because stock prices were down a lot all across the board. Selling stocks at a loss is not easy. And honestly, I was tempted to just keep holding on to them in the hopes that they'd come back up. But then I wouldn't be following the Magic Formula. And I didn't want to deviate from the strategy. I wanted to follow it exactly the way Joel Greenblatt teaches in his book, The Little Book That Still Beats the Market, which, by the way, I highly recommend if you want to understand the Magic Formula strategy a little bit better. Also, if you need a refresher on the strategy, check out this tutorial video right here where I go more into depth on it. So anyway, as hard as it was, I sold 4 of those stocks for a $676 total loss. Ouch. The other 3 stocks that had been in my portfolio for a year, I decided not to sell them because they were still on the Magic Formula stock screener list. Joel Greenblatt says that if your stocks still show up on the Magic Formula list when the 1 year mark comes around, you can hold on to them for another year. It's kind of like selling them and then buying them back again. So taking the loss on those 4 stocks that I sold wasn't easy, but this next part made me feel a lot better about the whole thing. After you sell the stocks that have been in your portfolio for a year, you also have to take that money and invest it in a new batch of Magic Formula stocks. And because the market was crashing, I knew I was buying these stocks really cheap. So the pain of selling stocks at a loss was offset by the pleasure of buying replacement stocks at low prices. Sure enough, that batch of replacement stocks that I bought right in the midst of the coronavirus crash has performed really, really well. My portfolio is up 55% from the lowest point of the coronavirus crash. And most of that is from the few stocks that I bought back in April, or was it March? March or April. For example, I bought Arena Pharmaceuticals for $14.75, and I recently sold it for $75.37, which is a 411% return. I also bought Mastercraft Boat Holdings for $5.48 and recently sold that for $25.48 a share. That's a 365% return. As a side note, there were also Magic Formula stocks that did the complete opposite, like Acorda Therapeutics, which I bought back in March 2019 for $13.15 a share and ended up selling for 85 cents a share. So that's a 94% loss. So that just goes to show the Magic Formula works on average. Not every stock is going to perform well. Some are actually going to go to shit actually. So you're going to have big losers and big winners. And then on average, you're supposed to get that 30% long-term annualized return. Now I'm going to show you a detailed walkthrough of my portfolio and what I did last year. So this was my first batch of stocks that I bought. There were 7 stocks and I purchased them March 28, 2019. And the Magic Formula tells you to buy a batch of stocks every 3 to 4 months until you have about 20 to 30 stocks total in your portfolio. So I did that every couple of months. So the next batch I bought in July 2019, and then another in September, and then another in December, and so on and so forth. And actually, by the time you finish buying all of your portfolios, you're going to have anywhere from 20 to 30 stocks. I went for 30, so that was the higher end of the range, and that makes a complete portfolio. And then the rule is after 1 year, every stock has to be sold. So once it's sitting in your portfolio for a year, then you have to sell it off. So I have a column here for date purchased and then the 1 year mark. And so March 28, 2020, right around then, the 1 year mark rolled around for this first batch of stocks. As you can recall, that was right when the coronavirus was happening and the stock market was crashing big time. So that was the first batch that I had to sell off. And I gotta say, it was pretty tough to sell stocks when everything is so low. So the P&L for that batch of stocks was, most of them were at a loss. Only a few of them, BIIB, that's Biogen, and then PetsMed, that was at a slight profit, but I had to sell all of these at a bit of a loss. And so the next batch of stocks that I bought, because I ended up with less money than I started with, which is what happens when you sell at a loss. So let's see here. The sum of these was about 4,800, but then after I sell everything off and you include the loss, I was left with about 3,300, which means I couldn't buy as many stocks for the replacement batch. So for the replacement batch, what I did was I bought these 6 stocks, which is exactly my point. I sold 7 and then I could only buy 6 because I had less money than I started with. And these bolded stocks are the ones that I actually kept from this batch here because they were still on the Magic Formula list, which I think was a good move because by not selling and just keeping them in my portfolio, I was able to avoid locking in those big losses and hold on to those stocks and hope that they turn around. And turns out that they actually did, because when I sold them a little bit earlier this year, I ended up selling all of these 3 at a profit. So that is the replacement batch. I bought 6 of these. And then as for going forwards, what I'm doing this year, I realized that this whole thing about buying stocks every 3 to 4 months is a little cumbersome. It becomes a lot to keep track of with all these different stocks being bought and sold at different batches. And also from my experience last year where life got a little too crazy and I just didn't have the energy to go in and manage all of these stocks and buy every 3-4 months, I realized that it would be a lot more convenient to just do this once a year. So to be completely transparent, I actually missed my 1 year mark sell date for a lot of these stocks. Like this batch here, I was supposed to, I purchased those in July 2019, which means I was supposed to sell them in July of 2020. And then this batch I bought in September 2019. I should have sold those in September 2020 and so on and so forth. So I missed a lot of these 1 year marks. And I ended up actually selling them in January of 2021. So this batch of stocks I held about 1.5 years, so a half year longer than I should have. And this about 3 months longer than I should have because I sold them in January, and so on and so forth. So instead of dealing with all of these different months and dates, I decided to just put everything on a 1 year mark, just sell everything at once. So I bought a new batch of stocks January 29th, 2021, and I'm going to sell all of them January 29th, 2022, and replace all of these with a new batch of Magic Formula stocks then. And that'll make it so much easier to keep track of all this. It really turns out to be a lot of numbers to keep track of. Even though the strategy sounds simple, in practice, it becomes a bit cumbersome. And although Joel Greenblatt specifically recommends buying these every 3-4 months so that you're basically buying stocks at different levels of the market and not just all at once a year, I'm just going to modify his strategy. I think it'll still work out because the point is you are buying stocks that fit Magic Formula criteria and you hold each one for a year and you sell them off after a year and replace it with a new one. So I'm still sticking to that basic principle. I'm just modifying the timing so that's a little more doable for me. But I want to be totally transparent with you guys. So just a quick recap of what I did and what I will be doing. I sold off my initial original batch of Magic Formula stocks. Those are all out of my portfolio. I've replaced them with this new batch here. And after 1 year, which is January 29th, 2022, I will be selling all of these off and replacing them with a new batch of Magic Formula stocks. And in case you needed a little refresher, you can go to magicformulainvesting.com and use their stock screener. I screen for a minimum market cap of 100 million. That's going to still be small cap stocks. And then in this list, I just randomly picked 25 stocks to buy. No real science behind it. I just made sure there were no gun companies and just companies that sell stuff that I wouldn't want to support. And I also tried to informally make sure I picked a diverse group of industries. So if I found that I was picking up a lot of pharmaceutical companies by accident, then I tried to diversify and not pick any more pharmaceutical companies. So this is my set of 25 Magic Formula stocks. So that's my little walkthrough. So what's the verdict? Is the Magic Formula worth sticking to? I think so. I believe in it. Plus, I'm so busy these days that I'm just thankful to have a formula to follow instead of reading through annual reports and analyzing individual stocks. I used to be all about that, and maybe I'll buy a stock or two if I come across a cool opportunity, but I'm just in a different season of life right now where I'm focused on other things, like my dog, options trading, deciding what city I want to live in next, a lot of things. Also, stock valuations right now are sky high, and sometimes they're totally dislocated from reality. So following a formula like the Magic Formula, and it's based on sound investment principles, that gives me comfort. The Magic Formula is all about buying good companies at good prices. So sticking to sound principles like that, it keeps me sane in an insane world where it's really easy to get sucked into the trends and groupthink and just make a bunch of decisions based on FOMO rather than rational investing logic. You know? Luckily, the performance of the portfolio speaks for itself. It's completely turned around since the coronavirus crash, up 55% since the lows, and the total return for 2020 was 6.6%, which fell short of the S&P 500, but it's understandable because the Magic Formula didn't include these hot, overpriced tech stocks like Tesla, Facebook, and Amazon, which are the stocks that drove most of the S&P 500's outsized return. I think where the Magic Formula strategy is really going to shine is during a crash, because all Magic Formula stocks, by definition, are underpriced. It's never going to include any overpriced, trendy stocks. I admit, during the pandemic, when I saw my Magic Formula stocks tanking, I started second guessing myself, and all the hours I spent studying Joel Greenblatt's book and all the work I put into making sure that this strategy made sense to me, I almost threw all of that out the window. Fear and human emotion are really tricky things. I came face to face with that in 2020. So we like to think that we're really logical and reasonable, but we actually become very irrational when faced with the prospect of making or losing money. The lizard brain tends to take over, and fear and greed really kind of make clear thinking impossible. So I think the moral of the story is that in investing, formulas are your friend. Emotions are not, especially at a time like this when everyone and their mother seems to be buying stocks regardless of the price. So I'm just really happy that I stuck to the formula instead of jumping ship when it got scary. Also, another important takeaway is that you should only follow an investing strategy if you understand the ins and outs, and only if you truly believe in the logic behind it. Doing something because you saw someone on YouTube make a ton of money doing it is not a good enough reason to follow it. And doing something because you kind of understand it so you can try it out for a year or two and then jump ship if it doesn't work, that's also not the way to go about it. If you're at all interested in the Magic Formula, definitely pick up a copy of Joel Greenblatt's book, and you can also check out these other 2 videos about it right here, which I've posted in the last few years. So that's it for my Magic Formula update. I hope you found this helpful. I post new videos every Wednesday, so be sure to hit that subscribe button for more videos about making, saving, and investing money. Thank you so much for watching. I appreciate you, and I will see you next week, same time, same place. Bye.